As the new year begins, China's currency is quietly sending a strong signal to global markets. The yuan is gaining strength, and the way it's happening matters just as much as the move itself. China's yuan extended its gains into the new year on Monday, touching a near 32-month high against the US dollar, as steady central bank guidance and strong seasonal demand continue to support the currency. The yuan ended last year with a 4.25% rise against the dollar, marking its strongest annual performance since 2020. This move also snapped 3 consecutive years of declines, signaling a notable shift in currency trends. Analysts point to several factors behind the yuan's strength. One key driver has been the broader weakness of the US dollar, which has provided room for other major currencies to advance. At the same time, China's exporters increased foreign exchange settlements toward the end of the year, converting dollar revenues into yuan, a move that added further upward pressure. Another important factor has been the measured approach of China's central bank, the People's Bank of China, or PBOC. According to economists, the PBOC has been guiding a gradual and cautious appreciation of the yuan since mid-2025. While the central bank has allowed the currency to strengthen, it has also taken steps to prevent overly rapid moves that could unsettle markets. On Monday, the PBOC set the official midpoint rate at 7,220 for a dollar, its strongest level since September 2024. However, this fixing was still weaker than market expectations, signaling the central bank's intent to keep the currency's rise orderly. Under China's currency system, the yuan is allowed to trade within a 2% band on either side of the daily midpoint. By managing this reference rate carefully, authorities aim to balance market forces with stability. Market participants say the central bank's approach reflects a desire to avoid abrupt shifts. A fixing that is slightly weaker than market forecasts can help discourage sudden selling of US dollars, reducing the risk of sharp price swings and maintaining orderly trading conditions. In the onshore market, the yuan briefly strengthened to around 6.98 per dollar, its strongest level since May 2023, before easing slightly. The offshore yuan also traded near similar levels, underscoring broad-based demand for the currency. Seasonal factors have also played a role. Traders report persistent yuan demand from exporters preparing for year-end payments, including bonuses ahead of the Lunar New Year. The Lunar New Year, China's largest holiday, falls in mid-February in 2006, and this period typically sees increased currency conversions. At the same time, major state-owned banks were seen buying US dollars in the spot market. Analysts interpret this as an effort to moderate the pace of the yuan's gains, rather than reverse the broader trend. Looking ahead, market observers expect authorities to continue preventing excessive moves. Officials have emphasized that they want to avoid the yuan overshooting, but analysts generally believe that outright appreciation is likely to continue, supported by foreign capital inflows and signs of economic recovery. Financial markets have responded positively. China's benchmark Shanghai Composite Index rose more than 1% on Monday, reaching its strongest level since November. The index also recorded its best annual performance since 2019, reinforcing confidence in the broader market environment. Overall, the yuan's steady rise reflects a combination of global currency trends, seasonal demand, and careful policy guidance. Rather than sharp swings, China's central bank appears focused on maintaining stability while allowing gradual adjustments. As the year unfolds, investors will continue to watch how the yuan, equity markets, and policy signals evolve, especially as global economic conditions remain in flux.